Hello everyone, welcome to my YouTube channel. My name is Ryan Banks and my channel is about financial tips and tricks that you can bank on. And I post videos every second Monday at 5 p.m. Eastern. So most of you have already probably started the process of completing your tax return or have already completed it and may have received a big tax refund. Well, today I'm going to be telling you why a big tax refund isn't good for you. So before I start the video, if you're not familiar with tax brackets or this concept, I would suggest for you to watch my previous video before watching this one. And if you aren't subscribed to my channel, it would be greatly appreciated because it will help promote my content to more people like you. So now let's jump into the video. When you get paid, you could see on your pay stub that a certain percentage of the amount that you make gets put towards income taxes withheld. So you can consider this as a tax installment towards your income taxes for that year. And when it comes to tax time, you get taxed on a certain percentage of the income that you make. And the income taxes withheld that you paid throughout the year gets subtracted by the amount of taxes that you owe. So for example, if I make $50,000 this year, I get taxed at around 15%. So that's $7,500 of taxes owed off of my taxable income. And let's say I paid $10,000 of income taxes withheld throughout my paychecks throughout the year. So this means I would get a $2,500 tax refund before credits and other deductions. So you can say that I overpaid in my income taxes withheld for $2,500. So you can consider this as a tax-free loan towards the government, which isn't good. So instead, you could have invested that money and put it into the market and get an average of 5 to 7%, which is $125. But instead, you waited a whole year to receive that $2,500, where you could have got $2,625 within that same time frame. Now you might be asking yourself, well, how do I stop overpaying in income taxes withheld? Well, the one thing that you can do is when your employer gives you your TD1 and TD1ON form if you're in Ontario at the beginning of each calendar year, there's a certain section on that form that you can put an additional amount of income taxes withheld on each of your paychecks. So I would suggest for you to put no amounts there because your employer should be taking off the right percentage off of each pay based off of which income tax bracket you're in. So for example, if I make that $50,000, I get taxed at around 15%, so my employer should be taking off around 15% of income taxes withheld on each pay. And if you're still unsure, you can always calculate it yourself and see what your employer is taking off. So the last thing I want to go over with you today is this piece of advice. I would suggest for you to go over how much income taxes withheld or get taken off of each of your pay. And I would do a little bit of tax planning because you don't want to be stuck with a big tax refund at the end of the year or a big amount owing. And you don't want to be scrambling for money when you have to pay an amount because CRA's interest and penalties can accumulate very quickly. And if you're unsure or just want a second opinion, I would suggest for you to go see a CPA. So to summarize my video, the best case scenario, in my opinion, is if you get a tax refund or a tax owing amount close to $0, that's the best case scenario for you. Because this means you aren't overpaying in income taxes withheld, which means you can budget more towards investments or day-to-day expenses for you and your family, or you aren't underpaying and need to pay a big tax bill by April 30th. So I just want to thank everyone who listened to this video. And if you have any questions, you can comment on this video or send me an email at ryanbankscpa@gmail.com.